US Bank just charges $6,000 more in origination fees than advertised, and the CFPB knows it. In the next 8 minutes, I'll show you the exact numbers, the $13,000 difference it makes over 30 years, and the negotiation script to pull this fee off your settlement statement. Because by the end of this video, you'll understand the single line in their proxy statement that proves they planned this 2 years in advance, and how it can cost you $6,000 if you're not careful. Let me start with the fundamentals. When you apply for mortgage, your lender charges what's called an origination fee. This is supposed to cover the cost of processing, underwriting, and funding your loan. According to the Consumer Financial Protection Bureau's 2023 Mortgage Market Report, the average origination fee across the industry is between 0.5% and 1% of the loan amount. So on a $400,000 mortgage, you'd expect to pay between $2,000 and $4,000. But here's where US Bank differs dramatically from this baseline. The first fee is line 1004 on your closing disclosure, origination. Banks pad this by an average of 300%, costing buyers $2,800 at closing alone. However, according to US Bank's mortgage documentation and CFPB enforcement actions, the origination fee markup can be as high as $6,000. The CFPB 2021 investigation into US Bank's mortgage lending practices specifically cited instances where the bank charged origination fees that were inconsistent with their advertised rates and represented a deliberate markup strategy. Let me give you a concrete example. Take Sarah, a first-time homebuyer from Colorado who applied for $350,000 mortgage with US Bank in 2022. She was quoted an origination fee of $3,500, which seemed reasonable at 1% of her loan amount. But when she received her closing disclosure 3 days before closing, the origination fee had jumped to $8,900, a $5,400 increase from the initial quote. The explanation? US Bank claimed it was a market adjustment and updated processing costs. Sarah had only 72 hours to review these documents and had already committed to the home purchase. She ended up paying the inflated fee because backing out would cost her the earnest money deposit. This pattern is systematic. According to data compiled by the National Consumer Law Center, approximately 23% of mortgages originated by US Bank between 2020-2023 showed origination fee increases between the initial loan estimate and the final closing disclosure. That's compared to an industry average of just 7%. This isn't random variation, it's a business model. Now, let's talk about the long-term financial impact. That $6,000 origination fee markup doesn't just cost you $6,000. Because you're financing it as part of your mortgage, you're paying interest on that $6,000 for 30 years. A 6.8% interest rate, which is close to current market rates, that $6,000 becomes approximately $13,440 in total interest paid over the life of the loan. The Federal Reserve's data shows this compounds significantly. On a 30-year fixed mortgage, every $1,000 in additional principal costs roughly $240 in interest charges. So a $6,000 fee equals $13,440 in total cost to you. But there's more. That inflated origination fee also increases your loan-to-value ratio, which can trigger PMI private mortgage insurance requirements for borrowers with less than 20% down. According to the National Association of Realtors, PMI costs range from 0.3% to 1.5% of the loan amount annually. For $350,000 loan with PMI at 0.85%. That's an additional $2,975 per year or $89,250 over 30 years. A $6,000 origination fee hike could easily tack on another $3,000-$5,000 in PMI costs. The Consumer Financial Protection Bureau has been tracking these practices. In their 2022 mortgage market review, they specifically highlighted US Bank as having wider disparities between initial quotes and final closing costs compared to competitors like Chase, Bank of America, and Wells Fargo. The agency noted that this pattern disproportionately affects minority borrowers and first-time homebuyers who are less likely to challenge the fees or shop around. So how does US Bank justify this? They point to what they call risk-based pricing. In their 2021 proxy statement, the document they file with the SEC, US Bank included language about dynamic pricing strategies that would be implemented in their mortgage division. This is the smoking gun. They essentially told shareholders 2 years in advance that they would be adjusting fees based on various factors. But those factors aren't transparently communicated to borrowers. Beyond the origination fee, there are other fees bundled into US Bank mortgages that warrant scrutiny. Title insurance fees typically run 0.5% of the purchase price, so $2,000 on a $400,000 home. Escrow setup fees average $500-$750. Document preparation fees can range from $150-$500. underwriting fees, which should already be covered by the origination fee, sometimes appear as separate line items at $300-600. According to the American Land Title Association, title insurance is essential and shouldn't be eliminated, but you can shop around. Different title companies charge different rates. Here's where it gets interesting. Some borrowers have successfully negotiated these fees down by using what I call the competitive alternative strategy. When you receive your loan estimate, immediately get quotes from at least 2 other lenders. Then when you return to US Bank, show them the competing quotes. Tell them, I have an offer from Chase at 2% with a $100 origination fee. I'd prefer to work with US Bank, but I need you to match or beat that offer. In approximately 34% of cases, according to data from mortgage brokers, lenders will reduce their origination fees when presented with direct competition. Another tactic is the lender credit. This is less commonly discussed but incredibly effective. You can ask US Bank to provide a lender credit, essentially a rebate, that offsets their origination fees. The language to use is, can you provide a lender credit to cover the $6,000 origination fee? I understand this may result in a slightly higher interest rate, but the math works better for my situation. Sometimes lenders will agree to 25-0, 5% rate increases in exchange for eliminating origination fees entirely. Let's do the math. On a $400,000 loan, a 5% rate increase means about $200 more per year, or $6,000 over 30 years. If that eliminates a $6,000 origination fee, you break even but avoid the upfront cash requirement. Let me give you another real example. Marcus from Texas had the opposite experience. When he received his closing disclosure from US Bank with a $7,200 origination fee, he called the loan officer and said, I found an origination fee of $1,800 with Rocket Mortgage for the same loan amount and terms. Within 24 hours, US Bank's loan officer came back and said they could reduce the origination fee to $200 if he moved quickly. Marcus saved nearly $5,000 at closing. However, here's the counter-argument. Some banking advocates argue that origination fees have legitimately increased across the industry due to more rigorous underwriting standards, compliance costs, and fraud prevention measures implemented after the 2008 financial crisis. The Mortgage Bankers Association points out that loan origination truly is more expensive than it was 15 years ago, and fees should reflect that reality. This is fair, but it doesn't explain why US Bank's increases are substantially higher than competitors offering nearly identical underwriting standards. The CFPB guidance is clear. All fees must be disclosed upfront and accurately. If you see significant changes between your initial loan estimate and your closing disclosure, federal law gives you the right to ask questions. You can request a revised closing disclosure if fees have increased. And you have the right to shop around and compare. If you want the full numbers, the specific fee breakdown checklist, and templates for negotiation emails, the deep version is in my book Hidden Mortgage Costs, link in the description. In conclusion, the $6,000 origination fee markup on US Bank's mortgages is a significant hidden cost that can balloon to over $13,000 when interest is factored in. By understanding these fees, shopping around for competing offers, and using the negotiation strategies outlined here, first-time homebuyers can save tens of thousands of dollars over the life of their loan. If this video opened your eyes to the hidden costs of US Bank's mortgages, hit subscribe. I'm covering the $14,000 closing surprise, 23 fees Wells Fargo.